should sit at one end, yeah. So Bill Wyatt. Oh, yeah, he turned up.
You're just going to do it?
Yeah. Jeremy and Alex, do you want to grab a seat?
I heard. I wasn't there.
Steve?
I was there to see. There was a slog, so you're not the only ones.
Yes. Good.
First year, I remember I got a drunk ticket right outside.
Thanks everyone for coming. I think this is going to be a really fabulous panel. So I've interviewed a couple of the panelists and really fascinating. So I think you'll really enjoy it. And I wanted to introduce Bill Wyatt, who's the host tonight. Bill's from Shepherd Mullen. And do you want to say a few words, Bill?
Well, welcome and thank you all for coming. This is a very interesting topic and one that is actually much closer to what I do than most of these are, since I am basically a banking lawyer representing both borrowers and lenders. The firm is pretty well known in the financial services space. We have roughly 800 lawyers spread across the United States and then a few places in Asia and Europe. Are very interested in the technology aspects of some of our traditional practices like banking. And so we thank you all for coming, and this should be a very interesting talk tonight.
Thanks, Bill. And so now we're going to pass it over. You've got a mic?
I do.
Great.
I
And
don't know
Mark
if we can get
Prager
one,
is actually one of my advisors for FinTech Silicon Valley, and it's been really helpful. But he's also got his own business, so I'll let you take over and get the panelists to introduce themselves.
Great. Yeah, I'll start. First of all, I'm not sure I need a microphone. It's a small group, and we're also competing Giants, Warriors, and Sharks tonight. So it's a sports
there's games
trifecta.
on, is there?
Just
Oh,
a few.
that's why.
Just a few.
Nothing to do with you guys. Nothing to do with
Yeah,
that.
nothing, but we'll have a good time here.
Okay.
We've got some great folks on the panel. My background prior to Next Stage was with Visa, so I'm really familiar with the payment space. I've had a chance to work with a number of the folks that are on the panel over the years. And I think it's going to be really interesting to understand what is the technology out there that's really driving payments, what is the technology that's driving financial education and awareness and usage of the products, whether it's direct to the consumer or it's something that is maybe utilized as a feature that's offered to some of the existing financial institutions. So with that, I'm going to just let everybody introduce themselves. Rob, since you've got the mic, do you want to start there, please? Let's go this way.
Ram started a company called Earnin. Do you want me to say it?
Yeah, just say what it is, please. Just brief.
So we're not as well known as Visa, so I guess I should go into a bit more detail. So we have an app that lets people keep track of their earnings as they work. And because they can keep track of their earnings as they work, there's actually a lot of engagement. They open the app about 25 times a month. Interestingly, once they start using our app, their incomes start going up, so we see paychecks go up. Lots of interesting mechanics on why people's paychecks go up after they start using our app. We let them cash out their money, so if you've worked, you shouldn't have to wait 2 weeks to get paid. You can take out your pay as you want, so it's like an on-demand payroll. Money's in your account in less than half a second, so you could be at Subway, you need $7 for lunch. You work that morning, you take out your pay from that morning to have lunch. We also, the other interesting part with this is we don't charge any fees, so it's completely community supported. Users can cast whatever they think is fair. There's a huge amount of like paid forward where people tend to help each other out. And when they're able to pay, they pay for themselves, they pay for others. And then we do a few things around helping people budget. We have a financial calendar. It shows you your next 4 weeks in the calendar. You can see when your paydays are, and you can see when your bills are due. So you know which bills are due before, which bills are due after payday. We have a feature called Balance Shield that helps reduce overdraft fees. And so with that, you can set a threshold. When your bank balance falls below that, you can get a push notification from us. And if you want, we can also push your wages into your bank automatically so you don't get an overdraft fee.
Jeremy.
Hey, I'm Jeremy Kaufman, Scale Venture Partners. So we're a $400 million fund that invests in mainly business software. We do a lot in the FinTech ecosystem. I've been there for about 3.5, 4 years. Some of our investments include Box and DocuSign and HubSpot. And more recently, we've done a bunch in FinTech, Bill.com, Forder in the credit card fraud transaction detection space, and Socure, which helps banks manage digital identities as a service. Claim to fame, we turned down Chime at the Series B and the Series C, so made some dumb decisions.
Thanks for the shout out. I'm Alistair. I lead the product teams for risk and support at Chime. I've been there for a little over a year now. So Chime, if you haven't heard of us, we're the largest, fastest growing bank in the challenger banking space here in the US. We offer some great features for our members in terms of a checking and savings account. It's completely free, no fees, no overdraft fees, none of that. And then we provide some interesting features similar to Earn-In, where I'll give you your paycheck up to 2 days early. And we find that if you build these really simple, straightforward, easy to use apps in terms of banking features, you get a lot of engagement as well. You get people starting to save more money, and we really look to help our members save money.
Hi, Steve Hirsch. I'm the CEO of Token, and we're kind of in the plumbing business. So what we do is these pipes that connect your app to the bank. What we do is we create APIs for banks so that you can have a standardized API to get to your bank if you want to push a payment, if you want to look at your balance, if you want to look at your transaction history. Today you have to screen scrape or you have to use Bank A's API, Bank B's API, and so forth. We try to unify that so that there's a single API that you use. And we're also in the digital money space supplying digital ledgers for central banks so that we can move money instantly, 24/7, worldwide, very cheaply and securely.
Sounds like a great feature. I'm Adi, I'm with Borrow Money. Borrow is also a challenger bank like Chime. We applied for a bank charter, and I think that's the biggest differentiation we have from Chime right now. We're in the process of building our own bank. And for our customers, for our existing customers that are growing fast, we basically offer, similar to Chime, checking and savings accounts, but also loans and insights on top of open banking to kind of explain to the customer what they need to do and how they need to improve, what they need to do to improve their financial lives, basically.
Great. Actually, I'll let you keep that. So I want to talk a little bit about technology and education. And a lot of the folks that we're talking about, particularly in a challenger bank, are often targeting the unbanked, underbanked, less educated about financial responsibility and what's available to them. They're more susceptible to payday loan places. Ram, your comment about giving access to them when they need the money and avoiding that. But can we talk just a little bit amongst Adi and Alex and Ram in kind of that order? Tell me a little bit about how you build awareness of what you have. How do you develop that? Going to the consumer is a very expensive proposition because you're really building ground support, often with little funding as an early stage company. You guys have been fortunate where you are today. But I know from a Visa perspective, we're always looking at, is this going to be a feature that somebody like a larger bank, like say Wells Fargo, can take and add to their base of customers that they already have? Or is this something that a new bank, a new challenger type bank would do? So can you just talk a little bit about education to an audience that really needs the product but is probably least likely to know about it?
So they don't really come for the education, and they're pretty aware of what they need to do. So the problem is not awareness. The problem is more, habits, getting into the rut, and just fighting the day-to-day. So it's more about giving them the right tools to understand their situation better and to figure out how to deal with it than it is about really explaining to them that they all know that they need to have savings. They just can't figure out how to keep the money in savings because they need the money. So they put money in savings and then they pull it away. And they put money in savings and they pull it away. Because their financial situation is basically going up and down throughout the month. So we're there to try to help them with, similar to Chime, like can't take credit for that. So auto savings capabilities that are basically allowing them to save their change, right? So rounding up to the nearest dollar and put a little bit away every time. Or scheme from the paycheck that comes in, a sum or a percentage that will go away to savings. And we're giving them a really high APY to try to help them get the most out of their money. So this is just the beginning. There's a long, long way to go.
If I could just ask one more question or one
Yeah.
more part of that answer, how are you letting, if people know about the services that they need, they hate the fees that they're paying somewhere or some other location, how do you get to them? How do they hear about you?
So we're a little bit of their last resort at this point. They're basically, they can't afford a real bank account. This is why they're underbanked to unbanked. And they can't afford us because we're no fee. So they can come to us, it doesn't cost them anything. And they can have a real bank account and not just a prepaid card. And they can have real APY, and they can have real savings accounts.
But how do they find out about you? Though? That's
So very traditionally, paid marketing,
okay.
a lot of basically referrals.
Okay, Alex.
Yeah, one thing I wanted to highlight is something you mentioned that this population, and let's be straightforward here, 80%, almost 80% of Americans live paycheck to paycheck. This is not a niche little group that we're talking about. This is mass market. Americans struggle with this across the board, and it's not that they're susceptible to payday loans. It's the only option they have right now.
Mm-hmm.
They run out of money. They need, their car breaks down and they need $500 to fix their car so they can go to work and keep their job and keep getting their paycheck. This is the only option that our current market offers them. So I think it's a little, they know they spend too much on certain things, and when we do surveys and ask our members like what do you want from us, what can help, is they're like, I know I spend too much and I don't make enough money and I know this budget doesn't work out. So when we think about how we help them, is I think step one was don't charge them unnecessary fees, don't allow them to overdraft and stack fees so that they keep taking out $20, $30 that they can't afford to lose. But also provide them guidance, like, okay, here's where you're spending all your money, here's where you should spend less. I think as we think about the future of the products that Chime's going to offer, they will definitely be in line with either helping them save money, helping them direct where to put money, and providing more insights into how they spend their money. On the how we find people and the acquisition side of things, I think, again, pretty much a 50-50 split between paid advertising. I don't know if you guys have seen, we launched TV ads earlier last year. We're going to start exploring that channel some more in terms of Facebook, Instagram ads, those work well as well. And then on the organic side, referrals work, but also word of mouth. We have a peer-to-peer lending peer-to-peer money transfer inter-app as well. So we find families that are on Chime use that to frequently move money around. It's instant, it's free. It's like Venmo with 3 friends. So as Chime grows, that feature becomes more and more valuable and desirable for them to use. We build a great product that people really love. They spread the word. They get really excited about it. They feel like Chime has your back, and they want their friends to feel the same way. And the big one that actually works a lot for us is getting your paycheck 2 days early. If you're at work and it's Wednesday and you get your pay and you can go buy what you need and everyone has to wait to Friday, that is a very strong advertisement for us.
Great. Ron, I know we talked a little bit earlier about just kind of building awareness of the different channels you have to get that out and the kind of goodwill that you build with your customer base.
Yeah, so we have a few different channels. A large part for us is word of mouth, so people in our demographic, in our user base know other people are like them, so someone comes and says, hey, can I borrow some money? And they're like, if they don't have any money, then they'll say, go download the app. So there's quite a bit of that. There's quite a bit of happening through the employers, so in some cases employers see it as a benefit. Interestingly, attendance actually goes up for our customers, and so it's good for the employer as well. Quite often, the day before payday, there's higher absenteeism because people don't have money to buy gas to get into work. And so when they use our app, then they show up at work. So it's better for the employer as well. So a number of employers promote us. And we also see things happening like at the store level. So it's not uncommon for like people working in retail to go ask a manager for an advance. And managers don't like to go through all of that, and they're like, just go download the app. And I think one of the ways in which it's probably more challenging for us than some of the challenger banks, because everyone knows what a checking account is, but people aren't used to this concept of like, take your pay whenever you want it because you earned it. And so it's novel in that people aren't used to picking their own payday. It's even more novel in that we don't charge any fees. Everyone expects anyone in financial services to charge fees. And so there's this feeling of like, this is too good to be true. And so we have to overcome that as well, where in reality, what people are used to, overdraft fees and late fees on bills and payday loans, those are too bad to be part of our future.
Great. And I'd like to put this question to Steve and Jeremy and let you guys, anybody else comment on this. But can we talk a little bit about the technology? Maybe Jeremy, start with you, that you see coming down the road, some of the things that would really kind of ignite this field that we're talking about today, some of the features that don't exist. There's been a lot of focus on the unbanked for a number of years, and it's going to be a long climb to kind of continue to build that education. But are there other technologies that you're looking at or considering that you think would be interesting to this space to kind of gain traction faster?
Yeah, I can talk about two of them. The first is just broader transparency. When people don't understand what their accounts look like or the money that's there, well, then they are confused and they're not making their optimal financial decisions. So how do you gain transparency? You make it easier for customers to interact with their banking application. So one of the things that we've been looking into is something that Bank of America recently deployed last year called the Erica service, which is a voice and chatbot system. 1 million people are using it of their 22 million people in the user base. So we're thinking about, if you enable conversation and you enable voice and you can lower the cost to serve, if you lower the cost to serve, it makes it a lot easier for some of these challenger banks to get the unit economics to work. So we've been thinking about that as a new way to access banking applications. And we've also thought a lot about the importance of identity. Identity is core to the creation of an account. So one of the things that I spend a lot of time in the AI world is the movement towards pooling insights across customers. So rather than an internal team building out their own identity management or fraud solutions, wouldn't it be better if they could buy this as a service? And I think the impact of this on the challenger banks is that, again, you don't need to build up a team. Erica took Bank of America about 100 engineers to build. These people, you guys don't have 100 engineers on these kind of vanity projects. So these kind of things you can buy as a service are interesting, and how they can lower the unit economics, because the broadest challenge being faced today in a challenger bank is you have a lower LTV and you have to keep your CAC in check. And that's kind of the unproven model. So anything that influences that LTV to CAC ratio is interesting to me.
Great. Steve?
Yeah, so I think that opening up these APIs, the open banking, the shift to open banking is going to make it a little bit different in terms of how you do your startup. Because right now you have to sort of create your own bank to offer some differentiated service. And in the future, in the not too distant future, probably 3 or 4, 5 years from now, there'll be apps that offer all these features, and it will offer it to any bank that you have. And so it's going to change the dynamics quite significantly, because now you're going to be able to sort of choose your bank as to who's the best custodian of your assets. And that bank then will have enabled all of these different applications that you can use, if you're going paycheck to paycheck, or you have trouble managing your money. All of those things will be available at any of the banks that you choose. So it's now going to sort of change the dynamics. So, banks then are going to have to compete on a different level. And the most important thing will be that, am I on the open API that everybody else is on because I want to have the most apps? And right now, when I talk to banks and I say, these open APIs, it's really important that everybody adopts the same APIs, so that, because software developers only want to write to one API. And there are other banks that say, oh, we're going to use our APIs as a competitive advantage, we want to be different, we're going to have all these extra things, and we're going to compete because our APIs are better. And the reality is that those guys are going to be the losers. And it's the guys who standardize and say, you know, just like on the, everybody adopted the World Wide Web, right, for humans accessing the banks, and that brought tremendous advantages. But we don't have the same thing available for your app. And in fact, the laws in Europe say that you have to open it up to these entities known as PISPs and AISPs, which is account information service providers and payment information service providers. And there are only about 100 of them. And they, you know, you have to go through this regulations to be qualified. And that's silly because I can access my bank directly as a human being, but if I want to have my app access my bank, I have to go through one of those third parties. It's absolutely crazy. And so we're, you know, the Avengers is endgame, and we're at a pregame as far as open banking is going. But it's going to get there, and I think that's going to be a profound change. It's going to be as dramatic a change as when we went from cell phones, which were not open and not programmable, to the iPhone. And that's going to really change banking forever.
Great. I'd like to switch a little bit and talk about money management. And I would say, I think money managers and quick serve restaurant workers are the two categories of jobs that are most likely to be eliminated or greatly reduced in the upcoming years, because everything can be automated, or so much is going to be automated. So I've heard a lot of discussion about financial management and really kind of educating the unbanked or the underbanked on how to manage their money. But what are some of the tricks or the features that you see evolving over the next few years to kind of drive that education and build that awareness and usage? Anything in particular?
It's going to sound really boring. It's personalization. So it's not about what are the tools in general or what you should do in general. It's what you should do in your particular situation, in the current state that you are, with the current accounts that you have. And everybody has, even the underbanked, have multiple accounts. They have a Venmo, they have a PayPal, they have because one vendor accepts only PayPal and the other vendor accepts only Venmo, and their friends are using Venmo, and they're using other apps to transfer money outside of the US to family. So they have a bunch of accounts and they still need to manage them. And this management is so hard. And it's so hard to have a mental model of your finances at every single moment, kind of like what money went in, what money went out, and what's my current situation. There's a lot of anxiety around it, and this anxiety actually calls them, instead of getting into the app to check their balances, it's actually not getting into the app because there's so much anxiety around it. So helping them to understand the situation, to understand where somebody mentioned the push notification, to kind of like when there's a lower balance, right? So helping them with these little events, right? When in the right moment, saying like you're going to get out of money, there's a few options for you. One is earning, one is loan, one is, you know, move money from your savings for a short period of time, or anything else. But
Spend less.
yeah.
Yep.
Oh well, that too.
So, go ahead, Jeremy.
I was just going to say, I personally love the application of behavioral economics here, and basically choice minimization and minimizing decision fatigue. And I love automated, you know, let's take the pennies and round it and save it. I think the more you can take decisions out of the hands of people and make it more automated, you will get better outcomes. So I don't dispute the focus on education, but I am a bit of a cynic, and education is an indirect channel, and if there are more automated, higher ROI ways to do it, I'm all for that.
Rob?
I feel like I should disagree with that. So maybe I should disagree and I'll come back to answering your question.
Okay.
I don't know if the automated decisions that are designed to increase ROI are right, because then you're automating inequality. If the sole purpose of the automation is ROI, it's good for company, bad for individual, and that should not be the purpose of algorithms. And it's very tough to get algorithms that actually work well for individuals, because the people building those algorithms are not individuals. And so I think there's this whole debate about like it's nice to automate it and it's nice to make it really easy, but if the whole objective is ROI, I think it just leads to lots of divisions in society. And then to get profit with that cost, I don't think is worth it. But coming back to your question about products for the future, I think that there's going to be lots of innovation. It's tough to tell exactly how innovation comes about. But if you look at the things that actually stop innovation, if those can go away, I think it'll be really interesting. There's talk about the open API, but so far lots of the open API talks have all been read-only access. We just imagine a world where there was also write access. And if then you would have a layer where people could look at all the different types of bank accounts, and if there was a better bank account for someone else, you could use the write access, close the old bank account, switch all of your deposit information over, rewrite, transfer all of your bill payment information over. You could use this automated layer to force competition, and that eventually will be good for the customer if that kind of automated competition exists. So I feel like we're talking a lot about open API, but the real API that's good for consumers is far more than what the open API is.
Alex, any thoughts?
One thing I wanted to scratch a little bit below the surface on here is automation. I do think people want automation, and they want to be kind of, Chime's mission is to help people achieve financial peace of mind. And they achieve that by not having to worry about their finances. So what can Chime do to help them, to give them notifications, to tell them where to put money, where to save, where to stop spending, where to spend more, where to invest in the future. But in order for that to work, they have to trust us. So we have to build a lot of trust with our members that we're going to do the right thing for them, because if it is ROI we're seeking and we start building products that are just, force them to spend more because we make more on every transaction they spend on, that's going to start to erode trust. So I think as we think about automation, we do have to be very, very cognizant of the fact that it's not just ROI that we're optimizing, it's making sure that we build products and features and keep our business model aligned with the best interests of our members.
Great. One other question relative to some of the challenger bank status or some of the features being offered directly versus how you see the larger banks compete. Who's your competition?
So, as these larger banks try to invest more in technology, they build apps, they build Erica, which I've heard actually really great things about, so that's really impressive, that's amazing. Fundamentally, they're handicapped by their greed. What was it, a couple of years ago, they made $34 billion in overdraft fees. They're not going to be able to really change and innovate and build products that are good for their customers if they're trying to extract these overdraft fees and all these other fees from them. Like if you're a PM and you're like, hey, I'm going to build this feature and it's going to make our members happy because they're not going to overdraft, who's going to sign off on that if you're cutting out $10 billion of their profit? So big banks, we see them investing a lot, but until they make a fundamental shift in some of their business models, we don't see them as big of a worry there. In terms of the rest of the folks entering this space, I mean, like I mentioned earlier, it's a mass market. There's going to be a lot of big players here. It's not going to be a winner-take-all situation.
I agree.
So I have a question.
Yeah.
So the reason that big banks charge for overdraft fees and so forth is so that they make money and they stay in business and they can serve the customer. Because retail customers tend to be sort of money losers for the bank. And unless they're able to monetize that somehow, and perhaps they're doing it are you suggesting that overdraft fees is the wrong way to monetize and they should monetize it some other way? What's the other way that, say, Wells Fargo, for example?
Just for example.
Yeah. Is there a more profitable way?
Not for that. I don't know. What I think about it from Chime's perspective is we built a low-cost model using technology that allows us to offer a checking and a savings account without fees and making money off of just interchange fees. So we found a business model that works, that's aligned with their members. I leave it to Wells Fargo to figure out their business model.
I can help with the answer because we have a similar model. Our business model is very cheap. We don't have brick and mortar. We don't have marble. We don't have large large,
Boardrooms.
large boardrooms, large,
Private jets.
and large workforce, right? All of it is much more lean. We're built on a modern stack that works better. We don't have the legacy, so we're able to build a better sustainable model that's built on a banking without fees.
Yeah, I had an experience, this is a number of years ago when we were rolling out a payroll card. And this was a relatively new concept at the time. And if you walk into a traditional bank that has the expense of employees and branches, on a Friday, they've got a line out the door of people standing in line waiting to cash checks that are drawn on that bank. That bank is legally bound to have to cash those checks. And they want to process those people and get them out as quickly as they can because they're typically not the customer that they're looking for. I'm not saying this in a negative, I'm just saying this as more of as a fact. And when I was with Visa, we talked to this institution, and it was big boardroom, and talked about a product that they could give to these customers that they didn't have a background on. They didn't know who they were. They didn't know thin file or no file from a credit perspective. And I said, these people could electronically have their funds loaded. They wouldn't have to take a bus or a car to drive to a bank to cash a check every week. They'd have funds available, and oh, by the way, they could use your ATMs. They could actually generate revenue from an interchange perspective at the point of sale when they use this card. And there was one guy in the room that said, wait a minute, and he stands up all irritated. If you're talking about reducing the number of checks that we cash, I've got a problem with that because I'm compensated on how many checks we cash. And that was an example of like, I need to speak to your boss. Because it speaks to legacy, right? It speaks to a structure that these challenger banks don't have, and you speak to it from a source of a strength that you don't have all the employees, you don't have all the bank branches conveniently located on every corner, and what goes with that, and how does the population evolve? How is the unbanked population today? What are they looking for? What conveniences are they looking for? So it's really interesting to see kind of the dichotomy of these earlier stage challenger banks developing and the established banks trying to refigure their model, and how fast can they do that, and how important is that going to be?
So you're making an assumption that these challenger banks are always better than the legacy banks.
No,
okay.
no.
Right. Because in some ways they're not, and they're actually worse. So if you want a safety deposit box, right? Go to Wells Fargo, get your safety deposit box. You need to get another person added to your safety deposit box, right? You walk into the branch, get it done. So there are lots of services that the traditional banks provide that,
Sure.
that the new startups don't.
I need a cashier check to go pay somebody for
Sure.
a car or something.
Sure, and then, but also, and I won't mention any names, but one of them is in this panel. I was talking to a very successful startup who does, it's an investing startup. And they said that they don't take money from this bank anymore. One of the analysts here.
It's a bad government.
And the reason is that there's so much fraud. And so they just basically say, hey, if you're from that bank, forget it, you can't open an account. Right? So we talk about the good here, but there's also the flip side of it.
Yeah.
So it's important to have a balance.
Yeah, it wasn't my intent to say that the big banks are fat and slow and can't figure it out. I'm just suggesting that this is a market that we're typically going after on the challenger banks that are typically going after the unbanked, underbanked, that the bigger banks haven't done a good job historically of attracting because they haven't wanted that audience.
And the bigger banks don't want them.
Well, that's what you said, yeah.
Yeah, because they don't make any money on it.
Right. Well,
They can't monetize it.
but there's a business case on that too, because if they don't know what that thin file is and they give somebody one of these payroll card, GPR cards, and they develop a spending habit, and they see that this person that they have no information on is getting a deposit every 2 weeks, and they see that after 6 months and after 12 months, and they start realizing, maybe this person has a good job, and I know how much they're making approximately, I'd like to get to know them better, and they have a way to reach out. And that's a network that those banks have that they can utilize. I'm not sure how many are taking advantage of that. Probably? Oh, okay. Great. Steve, anything else you wanted to maybe talk a little bit about? This audience goes crazy whenever we talk about digital money. But can you talk a little bit about how maybe you see what you're working on from a digital money perspective coming into some of these newer banking entities?
Sure. So we've been doing digital money for about 6 months. We have 12 currencies that are available, and you can trade them on Stellar. So you can go in and trade your Stellar for US dollars, trade your US dollars for Bahraini dinar, change it to Jordanian, whatever, forget that. Yeah, I mean, it's like, you know, so you can just move money, you know, interchange, hold foreign currencies. It's all available now. People can do it today. You don't have to KYC or any of that stuff, unless you were to cash out into the banking system. That's where the point of control is at this point. But we're moving from that model, which is on a public ledger, to doing private ledger and having 100% KYC. So we know who all the players are, and all the players have to be approved by the central, by an entity which is regulated by the central bank of that particular currency. So in China, for example, it'd be really, really hard to get on the Chinese ledger. But if you wanted to get an account on the US ledger, then you get approved by a US bank, or your bank will get you approved to have to be able to hold US dollars. And so by doing this and having this technology, it will allow us to move money sort of peer-to-peer without having to go through the banking system, so that we can move money as easily as Bitcoin. But it's all, the bank sees everything, the central bank sees everything. They have sort of a God view of everything, and they know who everybody is. So in one sense, it's actually better for the central banks, because now they can actually see everywhere where the money moves, right? And right now they have no clue as to when cash moves. There's no visibility at all at the central bank, and when the illegal transactions happen. So here you have 100% view of what's going on, and yet you still have privacy because it's not a public ledger. So all your transactions are private. So only you and the regulator know what's going on.
One of the transactions types that happens to be really popular with people that are unbanked or new to this country are cross-border. Do you see what you're working on as a solution for?
Yeah, that's, so that happens instantly. So right now, cross-border FX is a basically 24/5 market. It's closed on weekends because central banks are closed. So, and it's also, when you do an FX trade, you get paid the next day. So it's basically a promise that you're going to, yes, I will deliver tomorrow this, and the counterparty promises to deliver tomorrow this, and then you cross them. And so if one side doesn't deliver, then you could be in a mess. And so here, that doesn't happen anymore, because the trades are now with cash. And so there's no settlement at all. It's essentially, you're just swapping your token here with their token there. It happens instantly, and there's no trust involved. And so now you can have 24/7 FX, and that will change a lot of things. And the other thing it enables for the unbanked, for example, is that you could have a card. So imagine a next generation card, so it actually digitally signs with a crypto secret in the card. So it's way more advanced than your Visa card, your EMV card. And so this card that you would have, and it exists today, I can show you what they look like. And we don't, this is not one of our products, so I'm not trying to. So it looks like this. This happens to be Ethereum, but it could be US dollars. So imagine having that I loaded this with 100 US dollars. And I went to France, and I could tap it, and they would get 2 euros. And right now, I can't use my credit card for that because €2 is under their $5 limit or €10 limit. So here, the merchant would get 100% of what they asked for, and they would get it instantly with instant settlement. And so we've never been able to do that sort of thing before. And so things like that will change the world in the same way that in Africa, you know, we have the what's the name of the system? Yeah, you know what I'm talking about.
Settle money, M-Pesa.
M-Pesa. Yeah. I mean M-Pesa. So you know, that really changed things in parts of Africa. But here, this is you know, something that's worldwide. And the technology is so cheap to be able to accept this. It's like, you know, adding another $5 to your payment terminal. And all the new payment terminals coming out will be able to accept digital signatures from stuff like this. So all the sort of the modern acceptance will be able to accept any kind of thing like this. So you'll be able to move cash, USD here, convert it at the best market rate for the FX and give it to the merchant. The merchant gets 100% of what they asked for. You know, so those are kind of really cool things that we've never been able to do before that this technology enables.
And along those lines, I want to jump to a conclusion, but there could be the possibility of somebody in the U.S. having family back in another country, let's say Mexico, where that transaction could happen between cards, where the money is loaded on one card but taken off in another country. Yeah,
I mean, you're essentially just you can transfer it, whether you know you actually physically tap it, or you just enter in their address. You know that transfer can happen instantly. And so this is actually really happening now, because we talked to one of the most prestigious central banks in the world, and so we got past the governor of that central bank, and so now we're into the next level of talks with them. And so if that goes well, then we could really see a big shift in how things go, because once these guys go, it's like, wow, it's safe for everybody.
Great. All right. I think we're going to turn it over to this vast audience for a little Q&A. If anybody have any questions they want to ask the panel?
Well, I'm curious about the little card you just showed us. So, in sort of a step-by-step fashion, how does that work? Okay, who's making promises to whom, and how are they settled? And
yeah, so this is just this does asymmetric crypto. So this will sign with ECDSA, King 1 or R1, or it could also sign with 25519. So these are just all crypto things. But basically, what happens is that the merchant says, I want to be paid €5. And I tap it, and by tapping it, I'm actually digitally signing the merchant's request. So I've just authorized that merchant to take, say, €5 out of my account. And so the merchant then goes and uses an API to talk to the, we'll call it the blockchain, but it's not really a blockchain, it's just a centralized database to transfer the funds. So it's as if the RTGS systems of all the world's central banks are open to everyone with an open access, just like Bitcoin is open in the same way. And so really the same thing's happening.
So does it ultimately get to a bank account, or has someone
No,
put
it
value
goes
on
into it goes into a sort of a parallel RTGS system, which is sort of the RTS 2.0 of central banks. And so it's on the books of the central bank that you made a transfer from person A to person B. And so in this case, you're not, because each central bank is controlling its own ledger, you just have an FX exchange that works the same way that FX exchange works today, except you're putting real cash into the FX exchange rather than promises.
How is there enough liquidity in that exchange for that to work?
Well, people will move. You know, so if I want to go and put 10 euros or 10 US dollars on here, I'll go to my bank and say, hey, here's my, $10 in cash, and they will give me $10 in credit on this, and they will hold on to that cash because they have to pay it to the central bank in order to get the coin. Right, so you can think of it going from my dollar bill goes to the bank, that goes to the central bank mints a token, gives it to the bank, and gives it to me, so that I now have basically exchanged my paper dollar for a digital dollar that's authorized by this, but is actually just on a shared ledger run by the central bank.
It's a true global currency.
Yeah,
Yeah. So I would.
this is the way. This is the future. You know, it's not a question of if, it's just a question of when, because we're seeing central banks sort of move to this technology now.
Yeah, I think the piece that we're talking about is there's a lot of technology out there that is truly scalable. And one of the things that I think has been challenging, which was really surprising, is NFC or near frequency communication. This is technology that's been out there for years. And if you look at what happened when it initially showed up on cards, and then the thought was, well, this is going to be on phones, so we don't need to put it on the card. So then it came off the card. People get their phones with NFC. All the terminals in the US are basically manufactured on a global basis. So they're all capable of NFC, but they're not necessarily enabled. That's down to the merchant and their acquirer and all that. And just that technology that's still not broadly adopted after how many years?
Yeah, there wasn't a good use case before, now to be able to do that.
Yeah.
So, but that,
Right.
now that's coming available.
But I mean, what's a good use case? Is it convenience? I mean, that was a use case, right? It was I didn't have to carry a card with me because I could use my phone, but I can't do that at Home Depot. I can't do that at Walmart, right? I can do it at Target. I can do it at Nordstrom. I've got 15 minutes. So, but it's part of its education, knowing that it's there.
Yeah, it doesn't
And part of it is the merchant, in this case, having a terminal that's not just capable, but actually enabled.
Yeah, and it's going to happen. It's going to happen over time. Apple is going to open up their NFC so it can actually be used for this sort of thing. So it's been locked down before, and so when these are some of the things that are happening to change all that, to change the lockup that Visa MasterCard have.
Okay.
I didn't catch the Challenger Bank business model, how you all make money.
Well, they don't yet, but they will. That's in the roadmap. Thank you.
You make money over interchange. When you swipe the debit card, we make money off the interchange.
Okay.
Do you know how interchange works? Do you want me to explain that a little bit? Okay. Yeah, and we have a low cost enough model that is sufficient revenue for us to be able to sustain a bank account.
Are you profitable right now?
Well, I'm channeling my CEO. Because of our spend, for our acquisition spend, no.
Okay.
But without our acquisition spend, we could be yes.
I will answer it.
Yeah.
So we're also making money off interchange. We're a little bit smaller than Chime, so we make a little bit less money. So we're still heavily using investors' money. We applied for a bank charter because we want to be our own bank, our own national bank, that can use deposit money to lend and be more of a traditional bank financial model, but again, without the brick and mortar and without the hordes of people.
Full-fledged bank, not an ILC.
Full-fledged bank.
There's probably more different language than full-fledged, right? Full-fledged, in my mind, is a physical presence and is multi-service.
Well, it's a new kind of full-fledged, right?
New kind.
It's
It's a-
digital only, it's currently mobile only, but it will be mobile first later on. And it's basically all of the banking services, or most of the banking services, because as you were saying, there's still stuff like cash that you need help with, or cashier checks. People still ask for them, so we need to support these somehow. So we use a lot of partners for these things. But generally speaking, this is a full service bank that has deposits and lending and mortgages and CDs and everything else that a bank is offering, plus the insights and the personalization.
So you're planning on making loans and mortgages and whatnot?
We are already making loans.
So you're planning on making money on the loans?
Yes,
Okay. So it's not just interchange?
eventually. right now, the most of the money's coming from teachers.
I think one of the other things, and kind of the purpose of the conversation tonight, was really to talk about innovation and technology that's helping advance banking, regardless of size. And so if you look at some of the equities that are being realized through some of the chatbots and some of the machinery that's replacing traditional humans that have done this for years and years, it makes the model a lot more attractive to operate than what traditionally had. And I think the potentially some of the challenge of the larger banks is they still have that infrastructure. And so how is the breadth of the services that they offer? And most of these guys are not offering credit cards. And you look at credit cards generating a lot more interchange and interest from people that don't pay off the balance and things like that. So there's a lot of different revenue models that some of the challenger banks don't take advantage of. But technology is really changing how these people are being able to go to market and how they're able to bring a lot of the people that are unbanked today, that are using check cashing places and payday loan locations to really manage their life. And so I think there's that educational awareness, which I know we've talked about is a little bit challenging, but is really going to be an opportunity for banks, regardless of size, to offer the kinds of services that are more customized for the particular client's needs.
So the banks that I've been around, when you talk about the unbanked or the underbanked, they don't have enough data to feel confident underwriting a loan. They can't really model the default rate with any level of confidence. Do you feel like you're going to have enough data in front of you to do that better than the next bank?
Can I take that?
Yeah, good.
The way that's positioned usually is, hey, like it's the person's fault that I don't have data or that they don't have enough data on their thin file. I would argue that's actually the bank's fault that hasn't figured out how to be able to make the correct kind of decision on that individual. They're risky, take typical cases overdraft. Why is overdraft fee so high? People say it's quite risky, we don't know what's happening, and so we need to charge $35. And I don't buy that argument, but that's the argument, because quite often those transactions are not $35. In our case, people avoid the overdraft fee because we're giving them access to their pay. If the bank is willing to go and look at the payroll data, then they would say for this duration of time, this person is not that risky because they know the paycheck's going to show up. But if the bank is not willing to look at that data, it's not that the data is not there, we're able to see it, the bank can see it if it wants to. The data is there, but the way the bank is used to looking for data, it's not in those places. And that's why they think they're risky. I think there's a whole bunch of new data sets that can help you better serve these, the people who are typically dark to the traditional data sets.
Yeah, it's more like I want to get your response rather than the question. So I very rarely have banking experiences, but I had a really bizarre one yesterday. I had to, basically I received a bill from a law firm in China that I do business with. I wanted to pay that bill. I had trouble with the law firm doing it, so I went down to the bank and wanted to pay this debt. It was only for $50. It cost me $50 to pay the bank fee to have a transaction, and on the receiving end, there was a $30 charge. So, it just like, what world am I living in?
Did you
right?
even know about the $30 charge?
They had the courtesy to tell me that.
Ah, okay. Good for them.
but it just seemed that this is just so wrong.
So you spent $80 to send $50?
Yes.
Okay.
To a Hong Kong bank.
That's a tough business model.
Steve has a card for you.
or alternatively, they said I could go down to Wells Fargo, basically, have a cashier's check done, send it by FedEx to the bank. And I said, I got so many hours in the day.
Yeah. Yeah.
So how do you respond to this?
That's exactly what he said.
Well, how do I respond to it?
Yeah.
Oh, you're absolutely right. I mean, the system is totally.
Well, does your stuff solve this?
Yeah. I mean, we use it to pay, we first used it months ago. We had a vendor in Australia who wanted to get paid, so we just paid him our USD coin. He turned it into Stellar and sold it on a Stellar exchange, and he was fine. He was quite happy. He got it instantly. And I got confirmation that he received it, right? Because I could look at the transaction on the blockchain. So, you know, what we're doing is the same sort of thing, but it's private and it runs at, you know, an absurd 10 million transactions a second. And, you know, like 1 millisecond latency, so it's like really, really fast. Whereas a Stellar, you're waiting like 5 seconds. So here I'd be only waiting a millisecond, but, you know, to me it was fast enough. So, yeah, this it's going to be night and day difference between how you're doing it today versus what you should be able to do in the future. But getting money into China, that's not so easy, right? Because the Chinese are specifically like, you know, really, they don't want their currency going outside of China. You know, they want, there's like this great wall around their currency.
Literally.
And, you know, and if you violate that, you know, and you cheat, then you probably end up in some jail somewhere and nobody sees you again for the next 20 years.
All right, let's try to get a couple of last questions here.
He actually had his
Okay.
hand up first.
Oh, yeah. I actually had a question about so while that currency is on that card, is it actually like in Ethereum? Effectively? Is it being held in a particular
Well,
currency?
it's like Ethereum in that, you know, there's no coin or anything
So,
on the card.
okay.
The card is just a private key.
Right, but is it affected by market fluctuations?
No.
Currency fluctuations?
No, absolutely not.
So it's actually in dollars?
Yes,
Okay.
yes, if you're holding dollars, it's dollars.
So
If
what would be
you're-
the difference between that and using like a no-card interbank exchange credit card? Everybody
there's-
uses today.
Yeah, there's no, you're not going through the Visa network, and there's no charges.
So I'm not paying the charges, right? The business is paying the charges.
Well, it depends. If you're using your card cross-border, you can get a.
Well, I don't. I mean, most people can get a no-card fee, no
Correct.
Yeah,
currency
yeah,
exchange.
so the other party has to have, you
Right.
know, one of these cards and so forth.
And
So-
everybody has a Visa already.
Well, not everybody has a Visa already.
Almost everybody internationally has a Visa. I've used it in all sorts of countries,
Yeah,
right?
yeah.
And
So
not,
this is
and
just
not
better,
everybody
cheaper,
can
faster.
get, no.
More access,
Yeah.
it's accessible.
One more
to get
question in the
access
back
to the
here.
Visa network, you have to, you
But
know,
it's in
qualify.
dollars.
and so
That's what I was
forth.
curious. Is it-
Hey guys, so
Go ahead.
yeah, last question.
Thank you.
I'm Jay. I just came back from London, where we're working on like a new dynamic interface for online banking. So I found this event. I was very happy because perfect timing. One of the things I learned when I was in London from my friend Patrick is this open banking, which I think one of you mentioned.
Yeah.
And the way he explained to me very briefly is kind of a new framework where anybody can start offering a checking account, kind of a decentralization of the process of offering these products and services. So you can have, you know, he said it like a joke, but Walmart can offer you a checking account now, you know, and any basically enterprise can offer you a savings accounts and, you know, a mortgage and whatnot. And that you will be able to, through some kind of unified app, right, just choose, I want to have my savings in this enterprise, my checkings, maybe I will keep it at Wells Fargo, and, you know, pick and choose that way. So can you validate this information? Do you have any info about this?
Yeah, I mean, broadly, you're asking, I mean, the future is, it's unbundling a full stack bank. So agree that I mean, also point number one, a lot of this innovation in London and Europe is more advanced in the United States. There's a number of different regulatory reasons why in Europe they are taking the lead there. So there's some different regulations in Europe that aren't necessarily in the United States, so that's why there might be some differences there. But broadly speaking, the idea is, if, talking about the different banking APIs, if you had a service that could do loans, and you had a service that could do a crypto wallet, and you had a service that could do a third-party application, the sum total of those three different services would equal what a traditional bank does today in the traditional bundled stack. So yes, the changes is due to different regulations, open banking APIs, and yes, broadly true.
Great. I think, last question.
Since I was like an honorary subject of the panel.
Without
okay.
calling you out.
Right, without
Right.
ever calling me
Yeah.
out. I mean, all of the innovation that you guys are leading is good for the customer, so it's fantastic. I think it's the right thing. I have a question about what the challenger banks think will win the market for the challenger bank set. So if you think about it, everyone's playing the same playbook, very classic Clay Christensen model. Find it some group that the large incumbents can't afford to go after, like the unbanked. Create a good product for them, and then eventually evolve that product so they can start to peel off the larger chunks of the bank's group while doing so at a lower cost. That model we know really well. In banking, what eventually led large banks to come in, if you follow the model theory that most markets converge to say 3, 4, or 5 big players, I don't remember the name of that theory, but in banking it was through acquisitions over time. In a lot of disruptive places, it's through things like network effects, but I'm not sure that that plays as much of a role here, and so I'm curious what you guys are betting on will lead to, you know, the few emergent ones to win the market in the challenger bank space.
Can I, this last question, and we're going to get pulled off, but Alex, can I put that to you?
Sure.
Chip's question.
So we do see, and we do predict that there will be a rebundling. So we've seen over the last 5-10 years, all these fintechs have been going after investing, savings, negotiating your bill, helping you with your pay. But there will be a rebundling, and we think fundamentally it's going to come to the member experience and the member trusting who they want to trust with their finances. And I think if you can build products that do that, I think you can win. But as I said earlier, there will be 4 or 5, probably more, I think, given the fact that back when the banks were consolidating, we didn't have this technology that made switching your bank account and switching your funds, switching your paychecks, switching whatever that easy. So perhaps in the future, we won't have just 4 or 5 players. There might be 20, there might be 30. But I think it's making sure the member trusts you and trusts you with their money. And 2, since there's going to be less friction to switch banks, they might not be just 5 players, there'll be many more.
Great. I want to thank the panel. We can talk a little bit afterwards, but I think I'll turn it back to Pamela because I think we have a presentation.
Yes.
Great.
So just give a hand. So I wondered if the panelists wouldn't mind joining the audience because we're just going to have one 3-minute pitch, please, and then networking. So Artie. So my loyal volunteer, Artie, is actually going to introduce the pitch. There you go.
Hi everyone, I'm Arti Kashkar, and we are going to be having Arjun Tyagarajan, CEO of WISE, and he'll be doing his 3-minute pitch for his company WISE. Thank you.
Thanks, Arti. There was a great panel discussion. Thanks to all the challenger banks and everyone else that was in it. So we are just coming from a YC interview, which was intense 10-minute rapid fire, so this is a lot better environment. And in case you're wondering, we got rejected, so I hope to do better on this one. So I'm the co-founder and CEO of WISE, and we are a challenger bank of a different kind. Obviously, we've had 2 great challenger banks, Chime and Varo, on the panel, been an inspiration to us. The reason why we're different is because we're building banking for the small business ecosystem. If you look at small businesses, you have staff that the business pays, and then you have customers that pay the business. So what we are doing is building banking for the entire ecosystem. So very, very different use case. What we really want to do is automate cash flow for the business. So that way the business has higher margins, and eventually we want to help them grow. So we have 4 key differentiators in terms of what we're doing. We are the first challenger bank in the US that's doing both business and consumer banking. The second is we are offering 2% APY on consumer and business FDIC insured checking account. And third, we are the first challenger bank that's using the Visa Direct rates to instantly pay 1.1 billion Visa debit cards in the world over the Visa Direct network. And fourth, we are the first challenger bank that's building a native payroll system
on top of the bank itself. So you would have seen traditional banks do it. They're partnering with Paychex or other third parties. So what we are doing is natively building payroll on top of the bank, which means for a business, they can instantly pay employees multiple times a week, every day. So for example, a housekeeping employee at a motel that works 10 a.m. to 3 p.m. At $20 an hour, at 3:01 when they step out of the motel, gets $100 in their bank account instantly. They can go to the ATM and withdraw the money. Now, payroll has been a challenge. You guys must have heard of 2-week payrolls, 4-week payrolls, net 30, net 90, and there is no reason the businesses should have to wait that long to get paid. So that's the problem we are trying to solve. How WISE works is that we first onboard the business with an FDIC insured checking account. As I mentioned, we offer 2%, which is our customer acquisition strategy. Once we onboard a business, they would then onboard their staff, which means, for example, a business that has 6 people on their staff, let's say 2 W-2s, 4 1099s, we actually create 7 bank accounts. And not just that, if they have 100 customers or members, we also would like to create 100 bank accounts for the customers. In turn, actually the business are our channels, and that way it's creating a network effect where customers can pay businesses instantly without the business having to incur 2.9% plus 30 cents in credit card transactions. So we're really trying to build an ecosystem where everyone plays in the same playground, and our mission is to empower small businesses and help them grow. We are launching June 13th with one of the biggest banks in the world. Again, our company is WISE, wise.us. My email is arjun, ARJUN @wise.us. If you want to help us get to our vision, please talk to us and help us out. I think we can go out and make a difference in the world. Thank you.
Thanks so much, Arjun. I think I'll move my thank to yours. So now we've got networking for half an hour, so please go for it. And thanks again for coming.